Well, hello, everybody. Thank you very much for having me. My name is Lewis Black. I'm the CEO and founder and president of Almonty Industries. We are currently the largest producer of tungsten concentrate outside of China. And we have just recently announced we've completed the last part of our KfW IPEX financing. And despite having been building the project now since last year, about 30% complete, we are now at a point of drawdown from the loan. So essentially, I think to talk very briefly about Almonty is we only know one thing, which is tungsten. For better or worse, that's what our expertise is. We have 5 generations of knowledge from our 126-year-old mine in Portugal. And we are represented in jurisdictions both in the EU and in South Korea. And we are now obviously looking to drive growth now that the financing is finished. The Samdong project in Korea is considered to be the top of the food chain for tungsten projects globally. Not only the jurisdiction that it's in, but its grade, which is about 3.5 times that of the average grade of a tungsten mine. Its longevity, 90+ years, and we have a vast amount of scale to increase that. And that is why we were able to attract a tier 1 financing for this project. Basically, when this project is up and running during next year, the company Almonty will account for roughly 30% of non-Chinese material, and about 7% of global supply. And ultimately, as I said, 83% comes from China, 6-something% comes from Russia, so roughly 90% between those 2 jurisdictions. And if you look at the key consumers of this metal, it's military defense, microchips, semiconductors, oil and gas drilling, tungsten oxide, battery applications, and cathodes and anodes. And on top of that, as an example, our location in South Korea is the largest consumer of tungsten per capita in the world. So I think our strategy of trying to only be present in jurisdictions that consume tungsten, where our customers can literally drive to their supply chain, has certainly started to bear fruit. Essentially, we are listed on the TSX, Big Board. We also have a full listing. We did an IPO on the ASX last year, which was in fact to raise capital to complete our equity component of the KfW loan. We are a relatively tightly held business. I am the largest shareholder alongside Deutsche Rostov and the Plancy Group. So, obviously, I put my money where my mouth is, and I've certainly followed my interest during this process. As I said, we're represented in the EU, both in Portugal, where we have an operation in Paniscara, Valtrachal, which is now being finalized in the permit stage, and Los Santos, which we closed back in the beginning of last year was full closure. We are going to be looking to do tails at Los Santos shortly, but at the moment, our focus has been almost exclusively on Samdong and on South Korea, which, as you understand, we are a tier 3 company with a tier 1 project, actually 2 tier 1 projects in South Korea. One is our tungsten project is now financed, and the second tier 1 project is the Molybdenum deposit sitting 150 meters underneath our tungsten project. So we have rather a lot of work ahead of us. Tungsten prices at the moment, they've taken a pause. The shutdown in China has taken roughly somewhere in the region of 1% decline in price. But ultimately, even this slide is already out of date. We are around 53% up on the year. I think what's also important to notice is that the geopolitical tension around tungsten is now accelerating. Korea, for instance, imports 94.7% of all their tungsten oxide from China, so they're entirely dependent. China and Russia, as I said, account for roughly 90% of the world's tungsten production. And so that's obviously problematic if you're looking for true diversity and to reduce your geopolitical risk. The US Congress in 2018 passed obviously National Strategic Critical Mineral Production Act, but more importantly, right now, there is a bill making its way through the Senate, a bipartisan bill called the REE Shore Act, which clearly defines tungsten, as well as manganese and lithium, as rare earth metals. And in this bill, they are stipulating that US defense contractors can no longer use Chinese tungsten, and they're going to strongly encourage their allies to follow suit. But what's more important is that the US government is now classifying tungsten not only as a critical mineral, but also as a rare earth metal, and to be lumped into that area of enormous strategic importance. And of course, the EU declared some while ago the importance of tungsten. In fact, you cannot export tungsten scrap outside of the EU, hence why they consider it extremely important. And if you look as a sort of broad spectrum of where tungsten is found against other metals, yes, we only use a little bit of tungsten, but use it in everything that really has any meaning in your life, whether it be automotive, mining, defense, consumer, aerospace, construction. Even Roskilde, I think 2 years ago, reclassified tungsten as an industrial metal to a technology metal, because it was now being extensively used in South Korea in batteries through the anodes and cathodes. It is a primary product to construct a semiconductor, which of course is very much in the news right now. And I think that ultimately, I think that the industry has said, well, we have a real problem in that if there is not a suitable, transparent Western source of tungsten, we face real problems given the low inventories that we carry. So Samdong, it's a brownfield site. It was reclaimed by the government in terms of its legacy issues on surface regarding tailings. It is a project that has taken us 4 years to redesign, to bring it out of the early 20th century when it was first built into the 21st century, so it complies at every level the highest standard of ESG in the world. And this was one of the conditions that KfW IPEX Bank demanded of us. What's interesting is that KfW have been pushing projects that they support, both in mining, but more importantly in all facets of industry, to comply with ESG some years before anyone else did it. So they were very much ahead of the curve. And that put us in a good stead to really approach what has become very relevant now. And so therefore, I'm happy we got to the end. It was not easy. And I think in many ways, both KfW and their independent engineer Hatch viewed this, that we were a tier 3 company. We are a tier 3 company. We had this tier 1 project. Could we basically rise to the occasion? Could we actually design a project and therefore build and operate a project at these levels? And I think after 2.5 years of forensic due diligence by Hatch and by the level of ESG we had to comply with and have now met, I think the loan closed because they said, yes, you guys can really do this. And I think this is going to be transformational for Almonty. The project's fully permitted. The construction is, the EPC construction is done by the former Samsung E&C team, but more importantly, the brains of the operation, i.e. essentially plants, mills, crushing, is all being supervised by Metso Autotech. They're not the cheapest on the block, Metso, but they make a great product. And we've worked with them for 30 years. And tungsten is extremely abrasive. And if you don't understand that, equipment gets destroyed in literally months. So Metso Autotech, they're very much instrumental in this. Again, I mentioned briefly the Molle Deposit. This is now basically under exploration. We intend to publish a new JORC report once data is completed. As we said, it is another vast high-grade resource, but more importantly, South Korea is the 4th largest importer of molybdenum in the world. So once again, we have a very willing and ready market on surface. This is our team. I'd like to say they're a good-looking bunch, but we've been together for many, many years. And I have no doubt that each and every one of them, except of course myself, could professionally make a great deal of money elsewhere in other commodities. But we're all passionate about tungsten. Most of the guys have a long family history with tungsten, and they are recognized as the best tungsten operational team outside of China and one of the best in the world. And so I think this is really another reason we were able to successfully conclude the loan with KfW. In terms of peer groups, well, I mean, right now, given the markets, this is a trickier one. Theoretically, we only have peer groups in the output of tungsten concentrate. But as we're going to discuss very shortly, we have already announced publicly that we intend to downstream part of our output in Korea and divert material out of Europe into downstream, as well as recycling, because obviously within South Korea, there is an enormous demand for tungsten oxide. And so that is a different peer group. And currently, the only peers then that would exist are either in Vietnam or in China. So you can see that we have a unique situation of being the only vertical Western supplier. In terms of cost curve, Shandong has two advantages that every operator loves, but you can't buy for love of money. We have a high grade and we have a vast resource. And both those factors forgive a lot of sins. And ultimately, even though we've always been relatively cost effective against China, who's obviously the big competitor, because of a lot of technology that we've developed over the years in Portugal to keep us cost competitive, Shandong has a huge advantage, which is its grade. And ultimately, we're using flotation as recovery, which is what the mine has always used traditionally in the past. But I think grade cannot underestimate the importance of grade, longevity, and location. And if these three things all come together, you have the greatest success of building and operating a fantastic project. It's vast. I think that's all I can really say. The deposit is enormous. We have 10 areas that we have permits for every type of metal, mineral that you can think of. We put everything on the list. But ultimately, we only have information on 2 of the 10, which is where Shandong's deposit currently is. But we know a third one was looked at by the government, and at that time, Korea Tungsten, back in the 80s. They also found large amounts of high-grade tungsten. So this thing is going to run, for a very long time. I would imagine a similar sort of duration as Panascara in Portugal. We have, not just the tier 1 financing, which is very important. We also have a rather unique offtake. The offtake ultimately has a floor price which locks in both interest, principal, and a margin of some 10 to 12 million US a year of free cash flow and no cap on the upside. I think this is very important for us. As we transition to tier 1, we don't get caught with a tier 1 problem, which is if the market turns against you, you've got a dramatic material financial event. This offtake ensures that as long as we produce the modeling of this project, which is 45% of its output, it's also another thing to remember, we will survive whatever comes at us next in terms of a bear market, because commodities are all cyclical. I think we're in now for a good super cycle, but we have to plan for the future. And it's worth bearing in mind that this offtake and this financing has all been based around 45% of our output, not 100. That 55% is free and clear to do as what we wish to do, which is we'll discuss it in a little bit. We also have a $20 million cost overrun guarantee in case anything slips through the net, but I think we've been nimble enough to address inflationary concerns that we've all had in the last 12 months. We locked down all of the pricing for our equipment early last year. We ordered our equipment before the financing closed to ensure we got those prices. For instance, the mills right now, if we ordered them, is over a 2-year delivery period, and they'd be 80% more expensive. Our mills are ready to go, ready to be shipped. So this was very important. And we recently announced we're running at around 4.7% over budget, but we have a 15% contingency outside of this cost overrun guarantee. So I think, as I said, sometimes being a smaller company allows you to be more nimble in approaching, impending problems like inflation. The loan itself is it's essentially a 6.25 year installment with a 2-year grace period, so 8.25 years. It's 3-month LIBOR stroke SOFR when that's replaced, plus 2.5%. And I think the consensus generally is that KfW is a fantastic lender. They're tough. It's not easy. It's not for the faint-hearted, the process, but They have a 100% track record of no bankruptcies and no defaults. They had no intention of starting with us. They made sure that we measured up to every one of their expectations before they signed on the dotted line. So it was a great day, I think, for my team to meet that standard. And of course, it's supported by an OAKB ECA covered guarantee. Again, when you have now two governments involved, scrutiny is at extraordinary levels. Construction has begun. Portals are in, underground mine development is about 6 months ahead of schedule. The good news is that our block models, which are all done through data mine, through our qualified person, and we worked with this gentleman for many years. We like to err on the side of caution on our block models. With what we've been doing underground in the last 18 months, we've established that we are anywhere between 25 to 40% more conservative than we had expected. We're seeing higher grades, more tonnage, and one of the issues as an operator that we are finding is you like to put your adits and access ramps and portals into barren areas. We just don't have any. With portals, we have mineralization within 2 meters at the beginning of the portal. So we have to choose, strange enough, we call it low grade, but that low grade is a higher grade than we have in Portugal. So it's a good problem, but it certainly confirms to us this is a very unique deposit. As we said, the mineralization is within meters of the portals. It's quite extraordinary. It's, you know, as an old tungsten dog that I am, it's really, there's nothing else I've seen, and we pretty much know every project on the planet. We have a file on everything. Nothing else is quite like this. So the scheduling is, the drawdown is imminent now. Basically, we've announced the last piece was done, and we are looking that during essentially the end of Q2 next year, we'll begin the project completion and commissioning stage. We are about 2 months behind schedule due to shipping issues, getting stuff from Europe to South Korea, but ultimately we're in and around the ballpark. Most importantly though, I'm focusing on budget, because right now with what's going on, I've got to be very careful that we control the costs, because we don't want to be in a situation where this budget gets blown out because of what's going on in the world. And I believe that we've done basically enough work to be able to give us the best fighting chance to see that happen. At Panasqueira, you know, as an older mine, we've got 20+ years still to go. We've just completed a new tailings dam. It's in the money, the prices are good enough now, it's making money. It's been around for 126 years, and it contains within it some of the greatest knowledge of tungsten processing and mining that exists left on the planet. 5 generations of knowledge. Tungsten is a very difficult metal to mine. It's very brittle. It's very complicated to process it. There is no better team to face both open pit, underground, flotation, gravity. There is everything here. And one of the great examples is one of the things we've done to shield from inflation is that we've taken some older equipment we had in Los Santos that we didn't require anymore, and we sent it to Panasqueira to be reconditioned and then shipped to Korea. Because in Panasqueira, in Portugal, we still have all of the workshops that have existed with all the apprentices that have been around for 100 years. We still have those programs. We still train carpenters and boiler makers, because ultimately that's how it's always been done there. And it's really served us well and continues to serve us well to have that type of expertise to enable us to, say, for instance, take old dryers that we have in Spain, rebuild them, recondition them like new, and ship them to Korea at a fraction of the price of buying new ones in order to counter the inflation. Well, as a company, as you see, our focus is tungsten. We have a significant amount of tonnage under our belt. One of the areas now that the financing is completed, we can now look at our growth. And I think that's very important. This chart shows just the effects of Samdong coming online without any downstream. So this is just essentially increasing our output from the 640,000 tons that we are currently modeled at with the offtake, increasing to the design capacity of 1.2 million tons. And this is something we were going to wait for maybe 24 months after project completion before beginning, but now we've essentially, with the Korean government's help and suggestion, we're actually going to move that forward so we can increase our outputs right from the beginning. This mine is unique. The financing is done. It's a critical metal. We don't know anything else but tungsten, and we're under construction right now. And we're building this mine. If we had to build this mine from scratch, from Samdong, would cost you somewhere in the region of probably $700 to $800 million. And we're going to be out the gate at just over 100. And the bank and Hatch feels that it's a very achievable number, given the work that's been done in the last 5 years. So I think also what's important is to briefly speak about downstream. In Korea, the product that's used is tungsten oxide. It's a relatively simple process to convert concentrate to oxide. It's essentially a chemical plant. And so we've also announced KfW have agreed to look at supporting us in the debt financing of that plant. We are bringing forward those ideas to now work with Hanai, which is the largest recycling company in South Korea, and the government at Korea. Recycling is an important facet of tungsten, given that currently all spent tungsten hard metal tools in South Korea are exported to Taiwan and then to China. And there is no collection business. So we will undertake to look at 25% of our output from our from our tungsten oxide plant as recycled. It's also important to note that the last 4 years, our growth has stagnated because of the attention we've had to give to this project financing. This has been an enormous undertaking for a company such as ours to achieve a tier 1 finance. That is now done. So now I can return to M&A work, to growth. We have one territory that is not represented in our portfolio. Outside of China, there is Japan, South Korea, the EU, and United States, who are the primary consumers of tungsten. We have now operations to assist our customers in the EU, South Korea, Japan, but North America is something now which I want to turn my attention to. And so I think that there'll be news following this, especially now that there is a bigger push by the US government to also look for greater independence. So on that note, Matthias, would you like to answer any questions?
I will not answer them, but I will ask them.
Okay, that's
So just for the chat, you all can post questions to the chat or the Q&A function. But the first question already came in. So maybe there was a misunderstanding, maybe I'm wrong, but the question is, when will the KfW sign the contract, the final signing?
Oh, it's signed. They've signed. It's done. Yes. The loan has been executed some time ago. Basically, what happens is the loan has been effective for the last, I think, 9 months, 10 months, but there's been a series of CPs that had to be met, 125 of them, all told. So when the CPs are met, the bank issues the drawdown letter. So the drawdown letter is we expect it either tomorrow or beginning of next week. It's literally now, because we just announced the last piece, which was the settlement with Plant C GDP, which has now been done. And so now there is nothing outstanding. But ultimately, we didn't want to draw it down prior to this because we didn't need the money. Yeah. We were consuming our equity. So now that we've consumed our equity, which is roughly $23.4 million US, we're now ready to receive the first drawdown from the loan.
Okay. Maybe you can stop sharing the screen then.
Oh, sorry.
Yeah,
stop sharing. It's a very nice picture. How's that? Is that okay?
Perfect. So with the rising geopolitical tensions, did you have like already tangible effects, positive effects on your company that you're the only producer outside of China?
Well, I mean, firstly, all of my customers are being really nice, which I know sounds a bit silly, but in fact, that's really indicative of the fact that, you know, this is a problem we all share. This is not just unique to us. This is, our customers also face exactly the same issue. So look, I mean, we are the only group out there that's producing of any scale. I think we have a team that's demonstrated its worth by getting over the finish line with KfW IPEX, which in itself was no mean feat for a company like ourselves. And that gives greater confidence to our customers to basically say, look, if they believe that you are corporately strong enough to be able to do this, we can also then support you further. You know, it's a strange thing. They know we're great operators, but all of our customers are big, cumbersome corporate machines. And so there's also, you have to also be able to integrate into that. There's no point when someone rings you up saying, where's my material? You sort of shrug your shoulders and say, I don't know. You know, there has to be a proper transparency in being a supplier now. It's not a question of just ringing them up when it's on the boat. There's a whole process to go through. And so it's been, we've always operated under those conditions, but I think the validity now, the validation of having KfW support this project and support us in the downstream says to our customers, you know what, they've made the turn. They're now making that transition from tier 3 going to tier 1. You know, this is the journey we're on. That's where the value is to our shareholders, because that jump is going to be quite enormous. The comps in China, for instance, and in Vietnam all have in excess of $1 billion market caps. We are at 200 million. So you can see that there is an enormous advantage for us to make this journey.
Yeah. And another question from the chat. Do you think that a global recession that we might be facing right now would decrease the demand for tungsten?
We're seeing an increase in demand because of the new applications that it's being used in. So the push to a greener future has put a great deal of pressure on the tungsten supply chain, no doubt about it. In terms of a recession, ultimately, we've already seen a drop in tungsten in demand from the car sector because of the bottlenecks for semiconductors. But ultimately, we've seen that demand be picked up by the new uses, whether it be batteries, whether it be in the semiconductor industry as they expand capacity. So ultimately, I don't expect to see pricing reduce. There's also another factor to consider. Right now, as we said, 83 or 90% of tungsten comes from Russia or China. Our customers are now trying to look for legitimate diversification away from that. So yes, we may see a drop in demand, say, in China, but we don't, as a Western company, feel we're going to see a drop in what we're doing, because what we have is a transparency that is desired, especially now we comply with all the levels of ESG. You know, we're even using renewable, 25% of our energy now in Portugal is from solar. So we've been making these plans for some time. So yes, there could be a drop in terms of China, but we don't think we're going to see a drop in what we're doing and in the territories we operate in.
Okay, and then there's the question, is there a timeline for the molybdenum development that you can already share?
Well, I mean, ultimately, everything is always about money. So now that we've got one thing out the way, then I'm going to look at another. You know, if I can bring, you know, further smart capital into the business that's cost effective or you know, reasonable for all of our, for me as a shareholder and the rest of the shareholders, we can accelerate it. Right now, I'm still in the I'm going to walk before I run phase. Allow me to start the vast amount of work on surface. Let me look at what other opportunities exist out there. There is a program in place working on the Molle. I would like to think that the JORC report will be finalized before year end. But more importantly, I'm looking what support I can gain for it internally, given that it's a product that is consumed in quite enormous volume in country in South Korea. And
do you view the issue with the rising energy costs, could that affect your profitability?
In Portugal, well, in Portugal, we were very fortunate. We decided to actually try and address this last year. And so we made an arrangement on a 2-year fixed price with the government. So in fact, we're actually paying less cost now than we were beginning of last year. And so we're about 560,000 euros better off. In Korea, everything is done through KEPCO, through a state-owned energy company. And prices have risen around 8%, but 50% of their energy comes from renewable in South Korea, both nuclear and obviously wind and solar. So they have a little bit, they're a little bit more shielded Coal is also the big driver. 30% comes from coal in Korea. So there's been less of an impact in terms of rising prices. Yes, of course, we're always concerned, but I think the dialogue that we have with KEPCO and with the government, and we're also in an economic development area, I believe that we won't see further rises over this 8% that we currently have.
Okay. And would you, regarding a producing asset in North America, would you buy an existing one, or would you build it from scratch again?
Well, there isn't an existing one. I mean, there's nothing really is in operation. We would look for something which measured up to the boxes that we need to tick for our customers, which is longevity, grade, location. Of course, location is relatively straightforward because it's North America. So the jurisdictions are good. But certainly we're now looking and in dialogue with different parties. We have to really establish what it is, how quickly can it come to market. You know, there's all kinds of factors, but we have to now get back to growth. And we have to ultimately, if we have an opportunity to work with our customers, because this is the moment that they're all supportive, we need to take that opportunity.
And in which quarter do you expect the Molle reserve estimations?
The Molle?
Yeah, the Molle.
Well, I mean, if everything goes according to plan, you know, the best laid plans and all that, we're looking Q4. But I'll report back to the market on that once I get a better clarity. I think right now our team is now on site in South Korea, but we're focused entirely in launching the surface works and of course all the different bits and pieces that have to be done to receive the equipment now being shipped from Europe.
All right. Another question from the chat. So what's your biggest cost factor for daily operations?
Well, I mean, in Portugal, of course, labor is always the big factor, followed up by energy and of course explosives are now, you know, that's no fun either. But again, we've managed to hedge our explosive costs. Labor costs, we had a very productive meeting with the unions. So we worked through a rise this year, which obviously has been beneficial to everyone, is to try and counter some of the inflationary pressures. But I think everyone understands the current situation, and I believe everyone is going to continue working forward. But yes, in answer to your question, labor cost is my largest item in Portugal. In Korea, it'll actually probably end up being more to do with reagents and energy, the actual consumables.
Okay. Another question from the chat. So when do you foresee a share listing or IPO in South Korea?
Well, I mean, I think once we start the process of the build and we lay down a firm plan for the downstream and where that downstream material is going to end up in country, obviously some of these are some of the biggest names on the planet, that will be the time to then engage the bankers to start the paper process for the listing. But we're probably, I would say, from start to finish, 24 months out, realistically.
Okay. So currently you have, oh no, there are other questions. Are there negotiations for the other 55% beside Plan C?
Yes, the output, the other 55%, yes. I mean, right now we could sell 300%. Such as the demand that we're seeing. But yes, we are already in discussion with the downstream for that 55%. But again, things will happen, you know, relatively quickly now. I know we're all very used to things taking forever at Almonty because of this financing. It's like a never-ending piece of string. But the difficult lift has been done. Now we'll go back to how we used to be before this financing started. We could do things quickly, nimbly, efficiently. So yes, I think you're going to see news flow start to really stack up now.
And the question from my side, I saw the price from tungsten rise constantly. So what's the main driver for that?
Demand.
Okay.
Demand has been the big driver. As I said, the global push to a greener future consumes a lot of tungsten.
Okay.
And when they switch on the ITER fusion reactor, I believe next year in France, if the damn thing works, tungsten will become, I think, one of the probably the most coveted metal on the planet, because you can't build a fusion reactor without tungsten. And a fusion reactor is the ultimate replacement for renewable energy. It's the ultimate. There's nothing, you know, it's the holy grail. It's the same way that they looked at nuclear back in the 20s. If this reactor works, you can now produce energy completely cleanly. And so I think yes, we're in for a good, green future is being very kind to tungsten.
And since you're so ESG compliant and producing in South Korea, I would imagine that your tungsten might be a bit more expensive than the Chinese competition. Is that true, or is that a problem for your customers? Or
no, I don't. It's all market. It's market priced. I mean,
okay.
we all operate from the same market pricing. I mean, China, Europe, we all price off the same indices.
Okay.
So no, I don't think, as we should. There shouldn't be a bonus because a customer chooses to buy from you because you tick a lot of boxes. You're transparent, you're in a safe jurisdiction, you comply to ESG, you have a track record of you always deliver on time, on spec. But it shouldn't be that you get more money for that. That's your job. Your job is to tick the boxes. That's a free market.
Okay. And since, for example, the US is isolating with the tungsten supply, and also the EU, might be the danger from South Korea to also stop exports, and would that affect you, or would the local production be enough?
No, well, local production is always enough, but no, we don't. I don't think this is a democracy. South Korea is a very advanced democracy. They have rule of law, rule of property. The US would never stop the export of tungsten, neither would the EU, especially to allied nations. That 45% we produce for Plant C goes to the United States, their plants in the US.
Okay.
This is a real democracy. And this is one of these. Japan and South Korea are the sort of shining lights in that sense over there. So, they put presidents in prison in South Korea. They don't mess around. So no, there's a real rule of law there.
All right. So there's just 1 minute left. Maybe you can give a great conclusion. I mean, the answers were fantastic and a great presentation as always. So the last minute is yours.
I think ultimately people have very little understanding of tungsten, because ultimately I think our industry has chosen it to be that way because it is so sensitive, it's so strategic, it's so important. They wanted to really keep a lot of the market speculation out, and most or all of the customers are the biggest blue chip names on the planet. All of our customers are vertical, and then they supply to the Fords and the Teslas and the IBMs, Boeings, Airbuses. So it's always been something which is absolutely essential to governments, but hasn't really transitioned into the wider markets, because ultimately companies like ourselves have never existed. And to say that we'll be the only vertical Western producer is an extraordinary thing to say on a planet of 7.5 billion people, but that will be the reality. We will be the only vertical producer of tungsten oxide that exists. If you're looking for diversification, where do you think you're going to go first?
All right. Yeah, thank you very much, Luz. It was a pleasure as always. Fantastic
Thanks,
presentation. And thank you.
All right, have a great day. Thank you very much, everybody. Thank you.